Hello everyone. This is Riddhima Jaiswal of BCom 4th semester studying in Fakhruddin Ali Ahmed Rajkir Government PG College, Mahmoodabad, Sitapur. I am here for my presentation of cost accounting on the topic marginal and standard accounting. So, I have a series of 50 MCQs. Let's start. Here the first question is marginal costing is also known as. The four options are variable costing, product costing, full costing, standard costing. And the correct answer is variable costing. An explanation is that marginal costing focuses on the behavior of cost and separate fixed cost from variable cost. It only considers variable cost when calculating the cost of a product or service. Next one. Which of the following costs are considered in marginal costing? The four options are fixed cost, variable cost only, fixed and variable cost both, direct cost only. And the correct answer is variable cost only. The reason is that, as we know, marginal costing focuses on separating fixed cost from the variable cost. It considers only the variable cost when calculating cost of a product or service. This approach helps in understanding the impact or changes in production volume on cost and profitability. Next question. In marginal costing, which of the following statements are true? The options are fixed costs vary with production volume, variable costs remain constant per unit, marginal costing is not useful for decision making, marginal cost is same as the total cost. And the correct answer is variable cost remains constant per unit. The explanation is that in marginal costing, variable costs are assumed to remain constant per unit of production. This means that the cost per unit of a variable cost remains the same regardless of the production volume. Now, the next question. Which of the following is not a characteristic of a marginal costing? The four options are focuses on variable cost, separate fixed cost from the variable cost, considers all cost in decision making, helps in understanding cost behavior. The correct answer is considers all cost in decision making. The reason is that one of the main characteristics of marginal costing is that it focuses on separating fixed cost from the variable cost. Next one. The marginal costing is calculated for which of the following? The options are manufacturing of one additional unit, manufacturing of one less unit, manufacturing of many additional units, manufacturing of many fewer units. Now, the correct answer is manufacturing of one additional units. The reason is that marginal costing defines this in itself. Next question. What is BEP in marginal costing? The options are bank entry pass, break entity pass, break even point, break entity point. And the correct answer is break even point. The explanation is that BEP in the original costing refers to a point where the contribution line crosses the fixed cost line. At this point, no profit is gained or no loss is incurred. The marginal costing technique is useful in making the following decisions for the management. The options are the decision to make or buy, to determine the price of the product, to accept fresh orders at a low price, all of the above. The correct answer is all of the above. Explanation is that the marginal cost will give a fair idea to management whether it's more profitable to manufacture a component or buy from outside. Next question is that the kind of cost which will not differ due to the volume of production is called variable cost, fixed cost, marginal cost, none of the above. So, the correct answer is fixed cost. And the reason is that the fixed cost is the cost which is incurred during a specific period, no matter how much activity is taking place. Hence, fixed cost will not depend upon the production volume. Now the next one is that the marginal cost of change in the total cost when the quantity of a product is. Here the four options are increase by 1 unit, decrease by 1 unit, increase by any given number of units, decrease by any given number of units. The correct answer is increase by 1 unit. And the explanation is that marginal costing measures the rate of change in the total cost if the output increases. So, 10th question. Which of the terms given below will help an organization in decision making? The options are total cost, fixed cost, opportunity cost, marginal cost. And the correct answer is marginal cost. The reason we all know that marginal cost helps the company to optimize its production and other operations. Hence, the marginal cost is an important factor in decision making. Next question. The marginal cost will be equal to. The options are all the sales profit minus all the production cost, the sum of the fixed cost and the variable cost, prime cost plus all variables overhead, prime cost minus all the variables overhead. The correct answer is prime cost plus all the variables overhead. The reason is that the marginal cost states how an additional product affects the total cost. Hence, it added all the premium cost and all the variables overhead. Next one, the variable cost is made of. The options are the salary of all employees, the electricity bills, cost of all the raw materials, all of the above. The correct answer is all of the above. And the explanation is that the variable cost is also called the production cost since it consists all the costs incurred during the production, like raw materials, employees, electricity bill as all incurred during the manufacturing process. Next question. What is the meaning of the term contribution? The options are the subscription for raising capital, the sum of fixed cost and variable cost, extra selling price over variable cost for each unit, none of the above. The correct answer is extra selling price over variable cost for each unit is meant for contribution. Explanation is the contribution is the total difference between the sales and the marginal cost of those sales. Hence, it can also be defined as an extra selling price over variable cost for each unit. Next question is that what is the another name for variable cost in marginal costing? The options are periodic cost, total cost, product cost, all of the above. The correct answer is production cost. Explanation is that the variable cost is all the costs incurred by a business directly or indirectly due to the production. Next question. What is the another name for fixed cost in the marginal costing? Here the four options are period cost, total cost, product cost, all of the above. And the correct answer is period cost. The reason is that the fixed cost is the cost which is incurred during a specific period, no matter how much activity is taking place. Next question is that what do you know about the marginal costing? Another term for marginal costing. The options are production costing, direct costing, variable costing, both B and C. The correct answer is both B and C. The reason is that marginal costing involves the direct costing as well as variable costing. Next question. The profit to volume ratio in marginal costing can be improved due to the following factors. The options are if the fixed cost is decreased, if the variable cost is increased, if the selling price is increased, if the fixed cost is increased. The correct option is if the selling price is decreased. The reason is that the increasing selling price will lead to more profits. The number of units stays the same, hence the volume will stays the same. Next one is that an increase in the variable cost will lead to one of the following. The options are the marginal safety will be improved, there will be a decrease in the break-even point, the profit to volume ratio will be improved, all of the above. The correct answer is D. Explanation, it depends all the above points. Next one, what is the primary purpose of standard costing? The options are to track actual costs incurred in production, to determine the selling price of a product, to establish a benchmark for evaluating performance, to calculate the break-even point of a business. The correct answer is to establish a benchmark for evaluating performance. Explanation is that standard costing involves predetermined standards for the cost of materials, labor, and overhead. These standards serve a benchmark against which actual cost can be compared. 20th question is that which of the following is a benefit of using standard costing? The options are provides a more accurate reflection of actual cost. It simplifies the account process. It helps in identifying inefficiencies. It eliminates the need of. The correct answer is it helps in identifying inefficiencies and cost variances. The reason is that it allows businesses to compare actual cost with predetermined standards, making it easier to identify any deviations or variances. Next one. Under the standard costing system, audit fees are a part of which of the following? Option number 1. Audit fees are included in company's distribution cost. Option number 2. Audit fees are an element of company's selling overhead. Option number 3. Audit fees are an element of organization administrative. Option number 4. Audit fees are an element of an organization cost cutting efforts. And the correct answer is audit fees are an element of an organization's cost cutting efforts. The explanation is that standard costs are estimates of the cost of goods sold or the cost of manufacturing your products. Direct materials, direct labor, and manufacturing overhead are usually the three components. Next question is that under the standard costing system, which of the following assertions is correct? Options are a predetermined or expected cost to manufacture a good service or perform an activity inside an organization is referred to as standard cost. Standard cost is a control approach that aids in the reporting of deviations by comparing preset standards to real expenses. A and B both are correct. A and B both are incorrect. The correct answer is A and B both are correct. The reason is that the practice of estimating the cost of production process is known as standard costing. Next question is that under the standard costing system, which of the following actions is true about the cost variances? The difference between standard costing and the planned costing is known as cost variances. The gap between standard and marginal cost is known as cost variances. The difference between the standard costing and actual cost is known as cost variances. The gap between actual and marginal cost is known as cost variances. The correct answer is the difference between the standard costing and the actual cost is known as the cost variance. Next question is that which of the following is not included in the principle of cost accounting? The four options are product costing, planning, controlling, profit sharing. And the correct one is that product costing. The explanation is two accounting strategies for determining the cash required to manufacture goods and services are cost accounting and product costing. Next question. Within the standard costing process, a fundamental standard is set for. The options are as follows: a long duration of time, the current time frame, the brief time frame, a period of indefinite duration. And the correct answer is the brief time frame. The reason is that basic standards are unchanged standards that have been in use for a long time and do not reflect contemporary circumstances. And the next one is that which of the following features of the standard costing system is not a disadvantage? Traditional cost variations aren't related to any particular product lines. The standard costing system is significantly more expensive than alternative solutions. It is frequently less expensive than standard or actual pricing. And all of the above. The correct option is it is frequently less expensive than standard or actual pricing. Next one. The standard costing system has which of the following advantages? It aids in the promotion and measurement of organizational efficiencies. It aids in the control and reduction of an organization's overall cost. It aids in the determination of the selling price of the product created within a company. All of the above. The correct answer is all of the above. The explanation is that top management might benefit from a common cost system when planning and making decisions. They are more reasonable and easier to measure inventories. With all the above points are advantages of standard costing. The standard costing system is utilizes for which of the following activities? It serves as a foundation for executing cost control. It aids in determining the cost volume connection. It aids in determining the company's break-even point for the product it produces. None of the above. And the correct answer is it serves as a foundation for executing cost control and determining product pricing through variance analysis. Explanation is that the practice of estimating the cost of production is known as standard costing. It is a type of cost accounting that allows us to serve as a foundation and execute the cost control. Next question. Standard costing is best suited for which of the following industries? The options are as follows. It is appropriate for industries that manufacture standard goods. It is inappropriate for service-oriented businesses. It is ideal for industries that make non-standard goods. None of the above. The correct answer is it is appropriate for industries that manufacture standard goods. Next question. Which of the following parties is accountable for significant price differences? The four options are as follows. Supervisors of production, managers of purchasing, timelines for production, none of the above. The correct answer is managers of purchasing. The explanation is that price discrepancies are the responsibility of the purchasing manager because they are responsible for arranging the material requirement from the market. Next one is that which of the following statements on the standard costing is correct? It is a method of implementing cost controls within a company. It aids in the organization planning of business activities. A and B both are incorrect. A and B both are correct. The correct answer is it is a method of implementing cost controls within a company. The explanation is that standard costing is a method of measuring and understanding variances by comparing revenues and actual cost of providing an item or service to actual results. Next question is that standard costing is the planned cost for a unit of product or service. The options are demanded, produced, supplies, none of the above. The correct answer is supplied. Standard cost are estimates of the cost of goods that are supplied and sold or the cost of manufacturing your products. Direct materials, direct labor, and manufacturing overhead are usually the three components. Next one is that standard costing is well as recognized as which tool in the manufacturing industry? A cost control tool, price determinant tool, manufacturing overhead calculation tool, none of the above. The correct answer is a cost control tool. The reason is that when using a standard cost system, lesser quantity of manufacturing expenses could be an advantage. Next question is that standard costing entails the creation of predetermined cost estimates to serve as a baseline against which the four options are actual cost can be compared, real cost can be compared, future cost can be compared, and past cost can be compared. And the correct one is that actual cost can be compared. Next question. Marginal cost is taken as equal to. The options are prime cost plus all variables overhead, prime cost minus all variable overheads, fixed overhead minus variable overhead. The correct answer is variable overheads. Explanation is marginal cost represents the additional cost incurred by producing one more unit of good. It includes all the variable cost associated with producing the additional unit. Next one. If desired profit is decided, the normal price should be marginal cost plus contribution, marginal cost plus fixed cost minus profit, marginal cost minus contribution, marginal cost minus fixed cost. The correct answer is marginal cost plus contribution, and the explanation is adding the marginal cost to the contribution ensures that both the variable cost and the contribution towards fixed cost and profit are considered setting the normal price. The income or gain expected from the second best use of resources lost due to the best use of the scarce resources is known as marginality principle, opportunity cost, incremental principle, equimarginal principle. And the correct one is opportunity cost. Opportunity cost are the possible advantages that a person or company forgo while choosing one alternative over another. Next question is that in certain sections, areas like plant closure and change in capacity, which of the following is more useful? The following four options are marginal costing, differential costing, absorption costing, activity based costing. And the correct answer is marginal costing. And the explanation is Marginal cost analysis is a key tool in decision making related to plant closure and changes in capacity, as it provides a clear understanding of the cost associated with incremental changes in production levels or capacity. Next question. Under cost control accounting, normal wastage of materials is debited too. The four options are costing profit and loss account, stores ledger control account, financial goods ledger control account, factory overhead control account. And the correct one is costing profit and loss account. The explanation: normal wastage is an anticipated loss. It is considered as part of the cost of production. These costs are deducted. In standard costing, point at which control functions and planning of management come together is classified as functioning, variation, variance, deviation. The correct answer is variance. Next question. Sequence the following activities in the process of standard costing. There are 5 options: establishing standard cost, measurements of actual cost, identifying variances and causes of variance, disposing the variances to cost and profit centers, comparison of actual and standard cost. Choose the correct answer from the options given below. So, the correct one is A, B, E, C and D. Standard costing is the practice of substituting an expected cost for an actual cost in the accounting records. Standard costs are assigned to production units rather than actual cost. Which of the following is a part of an organization standard costing process? The standard and actual costing process are compared, standard costing preparation and application, statistical analysis of variances, all of the above. The correct answer is all of the above. The explanation is the standard costing method is a helpful tool for management in determining production and pricing policies in advance. Next one is computation of overhead absorption rates should be based on maximum capacity, practical capacity, ideal capacity, normal capacity. And the answer is normal capacity. Which of the following best describes standard costing? A method of tracking actual cost incurred in production, a technique used to calculate the selling price of product, a system that compared actual cost to predetermined standard, a method of allocating overhead costs to different cost centers. And the correct one is a system that compared actual cost to predetermined standards. And the reason is that standard costing is a system used by our companies to compare the actual cost incurred during production with predetermined standards. Next, what is the primary focus of marginal costing? The options are calculating total cost incurred in production, analyzing the impact of fixed cost on profitability, determining the contribution margin of each unit, allocating overhead cost to different cost center. And the answer is determining the contribution margin of each unit. And the reason marginal costing primarily focuses on determining the contribution of margin of each unit. Next, which of the following is the characteristic of variable cost in marginal costing? The 4 options are as follows. They remain constant per unit at different levels of production. They increase proportionally with the increase in production volume. They are not relevant for decision making purposes. They include both fixed and variable components. The correct answer is they increase proportionally with the increase in production volume. Last question. Which of the following is a key advantage of using marginal costing? The 4 options are as follows. It provides a more accurate calculation. It helps in determining the break-even point of product. It considers both fixed and variable cost in decision making. It simplifies the process of allocating overhead cost. And the correct one is it helps in determining the break-even point of a product. Explanation is that the break-even point is the level of sales at which total revenue equals total cost, resulting in neither profit nor loss. By analyzing the contribution margin and fixed cost, marginal costing allows business to calculate the break-even point more accurately.